Hello everyone, this is Debra Richardson, and today I am putting the AP in Happy, where accounts payable teams are empowered to protect the vendor master file from fraud. This podcast will give a voice to accounts payable team members by talking about the growing reality of cyber attacks in their world and which vendor setup and vendor management techniques they can apply to protect the vendor master file from fraud. Need training? Visit the Vendor Process Training Center to enroll in your choice of weekly live and on-demand training sessions. Plus, get access to vendor setup form templates and reference tools that will help you and your team avoid fraud, fines, and bad vendor data. So sign up for a free account to get access to free training sessions, vendor process FAQs, and a resource library with information you need to manage your vendor master file. Visit training.debrarrichardson.com today. The link will be in the show notes. It's getting towards the end of the year, and now many of you may start to see the result of 3 worst practices with vendor data that can lead to compliance fines. If you want to know what they are and what you should be doing instead, keep listening. Welcome to episode 312, 3 worst practices with vendor data that lead to compliance fines. So maintaining an accurate and up-to-date vendor master file is crucial for any organization. Anyone that is listening to my podcast episodes, just a few, probably already know that is what I talk about all the time. Hopefully you know that your vendor master file needs to be up to date and accurate, although I know it can be a manual process to keep it that way. But there are several common practices that I continue to see that still lead to significant compliance fines or can lead to significant compliance fines. So here are the 3 worst practices that I have seen from either clients or subscribers or different conference attendees that you really should avoid. And I'll talk about what you can do instead. And so the first thing is the fact that at the time of vendor setup, not all of the vendor information is being collected. So a great example is when you set up, if you are a U.S. company, when you set up a vendor, you need to collect for U.S. vendors either a W-9 or for non-U.S. vendors, whichever W-8 form is applicable for that company. I have seen some companies not collecting a W-9 or a W-8 or the applicable W-8. And so for the W-9s, the reason that I hear is because certain tax classifications are not reportable. So the S corporation, the C corporation, right? Those are not reportable tax classifications. And so they don't collect a W-9 from those tax classes. And or I had another one where they didn't collect the W-9 because the amount that was going to be paid was going to be less than $600. Now, none of that should be something that you should do. Those are worst practices because, number one, with the situation or scenario where it's a corporation, well, there are certain payments that no matter what tax classification that company has to be, that are reportable. So when you're looking at reportable vendors, you have to look at 2 different things. You have to look first at their tax class, and then you have to look at the type of payment. So there are payments that are reportable no matter the tax class. So that would be things like medical or healthcare expenses. If you are paying those to a corporation, guess what? They are reportable. And as such, you should collect the W-9 and make sure that you are validating, and we'll talk about that later, right? The tax ID and the legal name match IRS records. But the same thing could happen. It could be just the flip side where you have a reportable tax class like that first tax classification of individual sole proprietor, but the vendor or the type of payment is for goods, and goods are not reportable. And you can have the same scenario with the forms that make up the series of the W-8, right? The W-8 BIN, the W-8 BIN-E, and then the other forms, W-8 EXP, W-8 IMY, and what's the last one? W-8 ECI, right? Those last three really look at eliminating the withholding for any non-US vendors. But the key here is that I see teams doing this all the time where they don't require the W-8. As a matter of fact, I ran into one team that gave the option to the vendor as to whether or not they wanted to submit a W-8. And with that, I mean, what vendor is going to say yes? A lot of your non-US vendors have heard of the IRS. They may even have their own tax ID if they want to claim a treaty claim. So you have many that are familiar with the IRS that will already have their W-8. They know how to fill it out, but then you have a lot that don't know how to fill out the W-8. They don't even know which one they need to complete. And many of them may not have even heard of the IRS, depending on the type of vendor that you're dealing with. And so, no, they don't want to fill out the W-8. So if they ask them, they're going to say no. And also on that matter, what I found when I was a practitioner is that with the W-9s too, but more so with the W-8s, is when we sent out the W-8 for the vendors to complete, the vendor didn't know how to complete it. And then when they sent it back in to my team didn't know if it was completed correctly or not. So we always had a tax professional to help us with that. I do have a training session on W-8 BIN and W-8 BIN-E that's 2 hours long. I'll put a link to that and the one for the W-9 for that matter in the show notes in case anyone's interested in getting W-8 and W-9 training for your team. But going back to the collection of that data, make sure you're always collecting the W-9 form and the W-8 form, because number one, you're not just collecting it for compliance. You're also collecting that data and that form as a deterrence from fraudsters to get set up in your system. Don't make it easy for them. Second of all, for those that don't collect it because of the $600 threshold, there are other types of payments where the threshold payment is less than that. Plus the fact that how do you know at the time of vendor setup that you're only going to pay that vendor, right, that set amount of money? Maybe you need to, maybe you get the first order in or the first set of services in, and now all of a sudden, right, you need more because, the scope has changed. Or it just never was going to be under $600 anyway because the internal team member wanted to say that just so they can get the vendor set up without a W-9. So don't make it easy for them. Also, as I talked about with corporations being exempt for tax reporting on the W-9, again, they are not free from all tax reporting. It's not just based on the tax class. It's also based on the type of payment, like medical expenses, like attorney proceeds for claims, like attorneys' fees. Those types of payments are reportable regardless of tax class. And with the W-8s, I would always, again, collect it. They're coming from a non-US vendor. You want to make sure you don't make it easy for non-US fraudsters to get in your vendor master file by not providing you information. Also, if you're not collecting the W-8 and the W-9, that probably means you're not grabbing the tax ID. And so that means you're not going to be doing the IRS 10 match, which means if the vendor or vendors turn out to be reportable, the IRS could issue fines and penalties and ultimately make you go out and collect that information, at which point that is usually a manual process and you have to follow or use specific verbiage. Such as with the B notice process. So fines, and you could have manual processes to boot. So that's the first worst practice. The second worst practice is just a lack of vendor verification or validation. And so we talked about collecting the IRS W-9, the applicable W-8 forms. And again, even with the W-8s, those vendors could have tax IDs. And so you want to make sure that at least on the IRS side, that you are validating that the legal name tax ID combination matches IRS records. And also on the non-US side, where you are looking at different tax registration numbers, business registration numbers, individual registration numbers for non-US vendors, those may be able to be validated as well. Just depends on the country. Most countries will have some type of vendor registration number that you can use to, one, verify that they are a valid vendor, and two, just make sure that it matches the records. So in the event of, let's say, a VAT number where the VAT tax, value added taxes, is included on your invoices, your company pays those, and then they file reports. Probably your tax team will file reports to reclaim that VAT collected. But if you haven't collected that VAT number, it could make it harder for those that in your tax team or whoever does that to collect that information or to gather it. Much better if you collect it. Plus, it's one way that you can verify that the vendor is valid and real by looking that up and making sure it's a valid number. Now, another piece is that is a larger compliance fine, by the way, than the IRS, is OFAC and other watch lists. So whatever watch list your company is required to comply with could be OFAC, right, through the U.S. Department of Treasury. If you receive federal funds, it could be sam.gov, right there. Excluded parties list, right? Just depending on your company, you do need to make sure you know exactly which vendor validations that your company should be performing. And it could be different from another company. So you can't just ask other people what they're doing. But in any event, you need to make sure you know what validations need to be done, and you need to do them, especially with the watch list, because I know we're all keen and afraid of the IRS penalty fines and penalties and interest, which we should be. But keep in mind that the OFAC, for example, they have both civil and criminal penalties, and that can get into the millions. As a matter of fact, they do have a website where they post the fines that have been assessed, and Facebook is up there for millions, and they have other companies that are up there for millions too. And so those fines can get pretty hefty, and they can be even steeper than the IRS. So you need to pay as much attention to those watch list fines and making sure that you're performing those validations as when you're onboarding the vendor. And then if you do not have a way to have continuous validations be done, then you need to put into place a process for recurring validations. I recommend to do that on a monthly basis, but I know that process is typically manual. But think about it this way. You are not supposed to pay vendors that are on these watch lists. If we think about OFAC, they prohibit U.S. individuals and companies or entities from paying vendors that are on that list. And if you have weekly pay files, then guess what? You probably should be doing that on a weekly basis before the pay file goes out, so that you're not paying any vendors that when you onboarded them, they were fine, but they subsequently were added to the list. You have to know that. And so on a monthly basis is a great kind of best practice. If you can do it more than that, that's even better, but at least do it monthly. So the second one, right, the lack of vendor verification, either at vendor onboarding and then or at a recurring interval that keeps your company protected from any fines related to a change in their circumstances. And that could be true with watch lists. It also could be true, for example, with the IRS legal name tax ID combination, because a lot of times vendors won't tell us if they were merged or were acquired, and that changed their legal name or their tax ID. They'll probably submit a bank change or a remittance change, right? So to make sure they get their payments, but they may not submit another W-8 or W-9 because they don't know you need to know that. And so you do need to make sure you're doing recurring validations for your vendor data. Okay, so that was the second one. And the third and last one is just inaccurate or inadequate documentation and record keeping. So what I recommend is that when you are setting up a vendor or making a change, that you save all of the documentation that you receive from that request. Now that includes the W-8, W-9, or if you have a vendor setup form that comes along with that. If you have a banking form, any type of document, maybe it was a contract that you received, right? You save that as part of the vendor supporting documentation that was used to update, to add or update an existing vendor. In addition to that, to prove that the validations were done and that the due diligence was done according to your processes, take pictures, right? Screenshots of all of the validations that were performed. So when you did the IRS 10 match, right, take a screenshot of the successful validation. When you did OFAC and there were no results, right? Because that's why you set them up. Take a screenshot of that shows the vendor legal name being searched and that there were no results as in that search. So make sure that you're taking screenshots of all the validations and you're saving that along with the supporting documentation. Now, one other piece of data that I recommend that you save along with all the other vendor supporting documentation and validations is the actual email itself. Now, the email is the email I'm talking about is the email where you receive the documentation. So if for whatever reason in the future that request or that vendor is found out to be fraudulent, or the request for a change is found out to be fraudulent, now you've got the source of the email. You don't have to go back and look for it. It's attached with the vendor information, supporting documentation, so that that whoever is performing the investigation, right, can review the email, the source of those documents. Now, that might not save you from any compliance fines, but if your company decided that even though a vendor is on the watch list or on one of OFAC's watch lists, that they're going to submit a request to OFAC to be able to pay that vendor anyway. Now you've got some due diligence that your company can use as far as submitting other documentation for that vendor, including not just the supporting documentation, but the validations from other sources. And so that might be something that other departments can use in their efforts for risk management or due diligence. Not to mention is very good for audit too, because I always recommend that there be an audit at the vendor level or the vendor process level to make sure that what is required for vendor setup and vendor changing existing vendors is being followed according to your desktop procedures. And so having copies of that information makes the audit process possible. Now, one last thing I want to mention is with the W-8s, there are some scenarios when you're collecting or paying non-US vendors. If there are scenarios where the vendor is not reportable based on the type of payment, or based on the fact that they are not doing the work in the country, right? There is no form that the IRS has so that you can document that. And so to document it, you need maybe a copy of the SOW, a copy of the contract, something that proves it, and attach that to the vendor record as well so that you have it in case you ever need it or your tax team needs it in the future. All right, so those were the 3 worst practices with vendor data that can lead to compliance fines. The first one is just not collecting vendor information that you should be collecting, like on a W-9 or on a W-8. The second one is just not validating that information either at vendor setup or implementing a recurring validation process because this vendor's information can change. And then the last one is just inadequate documentation and record keeping, because you do want to make sure that you are keeping a record of what was done. That includes the supporting documentation, that includes screenshots of the vendor validations, and what other information you need to verify why you did, what was valid at the time of vendor setup or at one of the recurring validations, which could help if your company is ever fined either by the IRS or by OFAC or another organization. It could help to avoid, reverse, or reduce compliance fines. All right. Well, thanks, everyone. I hope you enjoyed the 312th episode of the Putting the AP in Happy podcast, where accounts payable teams are empowered to protect the vendor master file from fraud. Don't forget to check the show notes for the links mentioned in the podcast. And if you enjoyed this episode, consider subscribing and writing a review of my podcast on the platform that you use to listen. Stay happy.